All right, let's dive right in. NVIDIA has been one of the absolute hottest stocks on the market, no question. But the big question on everyone's mind is, what happens next? So in this breakdown, we're going to put on our detective hats and sift through a professional technical analysis to see what the clues hidden in the charts are really telling us.
I mean, the stock has had a truly incredible run. There's just no denying it. But every rally, and I mean every rally, eventually faces a test. So is this one just getting warmed up, or are we starting to see some signs of exhaustion? That's exactly what we're here to figure out. Any good investigation starts by just surveying the scene. So first things first, let's establish the context and get a feel for just how dramatic NVIDIA's recent price surge has been. The journey here has been pretty remarkable. If you look back, it all started in early July, down around $158. Then August hit, and boom, this huge burst of momentum pushed the stock all the way up near 184. It took a little breather in September, but then the climb started right back up, bringing us to where we are today. It's a clear, powerful upward trend. Now, here's where it gets really interesting: the volume. Just think of trading volume as the fuel for a stock's engine. During that massive surge in August, daily volume peaked at a staggering 280 million shares. It's cooled off a bit since then, but what this tells us is that this was healthy market participation, not just some wild speculation. So let's sum up our initial survey of the scene. All the evidence points to a strong, healthy uptrend. But, and this is a big but, there are a few little fingerprints, some stray clues that suggest this rally might be getting a little tired. And to understand those, we need to bring in the forensic tools. And that, of course, brings us to Section 2, examining the clues. This is where we get into the nitty-gritty and break down the key technical indicators that analysts use to spot patterns and predict what might happen next. So let's decode what they mean for NVIDIA. First up, moving averages. Now, don't let the name intimidate you. All they do is smooth out the day-to-day market noise to show you the real trend. Think of the stock price like a super bouncy ball. The moving average is the smooth, gentle arc of its path, showing us the real direction it's headed. And wow, the data here just paints a crystal clear picture of the stock's strength. NVIDIA's current price is floating above all of its key moving averages. I mean, from the super short-term 5-day all the way out to the long-term 200-day. This is a classic, textbook, powerful bullish signal. It tells us that across every single time frame, the momentum is positive. Okay, next clue, the Relative Strength Index, or RSI. This is basically a momentum meter. It's a scale that runs from 0 to 100 and tells us how fast and how far a stock's price has moved. Generally, a reading over 70 is considered overbought, maybe a little overheated, while anything under 30 is considered oversold. So, NVIDIA's current RSI is sitting at 63.14. What does this tell our investigation? Well, it shows there's strong positive momentum for sure, but crucially, it's not yet in that 70-plus danger zone. It's kind of like a car going fast on the highway, but the engine isn't redlining just yet. Our final forensic tool is Bollinger Bands. I want you to imagine a river, okay? The stock price is a boat floating down that river. The Bollinger Bands are the riverbanks. Now, the boat usually stays within the banks, right? And if it bumps up against one, it often gets pushed back toward the middle. And here it is. This is our first major warning sign. NVIDIA's price is literally bumping right up against that upper riverbank at $189.93. In technical analysis terms, this suggests the stock might be overextended. It's stretched too far, too fast, and could be due for a pullback toward the middle of that range. Okay, so we've collected all the clues, and now it's time for the hard part, weighing the evidence. And this is where our investigation hits a classic crossroads. One set of clues is pointing in a very bullish direction, while another set is flashing some serious warning signs. This slide just lays out the whole conflict perfectly. The case for the bulls is solid. The price is floating above all its moving averages, and a bunch of other momentum signals look great. But then, the case for the bears is just as compelling. The price is hitting that upper Bollinger Band, a big red flag, and other indicators are screaming that the stock is overbought. This tension, right here, is what it's all about. So, with all this conflicting evidence, where do we go from here? Well, that brings us to our final section, the likely suspects. Based on everything we've uncovered, we can now outline the 3 most probable scenarios for what could happen next.
Ultimately, this whole investigation comes down to these specific numbers. Think of them as the battle lines. The resistance levels up around $190 and $191 are the ceilings the stock needs to smash through. The support levels, especially down at 184.55, are the floors that absolutely need to hold. The fight between buyers and sellers, it's going to be won or lost right here.
So, based on those battle lines, here are the three most likely outcomes. In the bullish scenario, a strong, decisive push above that 189.93 resistance could ignite a whole new rally. In the bearish scenario, if that 184.55 support floor breaks, we could see a drop toward 180. And then there's the neutral scenario, where the stock just bounces between these two levels for a while, basically catching its breath.
At the end of the day, the conclusion from the source report is a really balanced one. The big picture, that long-term trend, is undeniably strong and positive. But those short-term signals, the flashing warning lights we found, mean that caution is absolutely the name of the game right now. So there you have it. The evidence has been presented, the key levels are identified, and the potential outcomes are all laid out. The only question left is for you. With all the clues now on the table, which scenario do you think is the most likely suspect?